What's up, sons? It's Blind Rod with Son of a Tech once again, and welcome to yet another Talking Head video. It's been a while since we've done one of these. Today, I wanted to talk about how I've kept my mining farm up and running through the bear market and some of the strategies that I've utilized, some of the projects that I've been able to get into that have helped me survive, and some of my thoughts surrounding it. Now, as you guys know, back in September of 2022, Ethereum went from proof of work to proof of stake. And when this happened, essentially the bottom fell out of the GPU mining market. Initially, a lot of people moved over to Ergo, and that particular network had a difficulty issue, which we had been telling them about for quite some time, but they didn't have enough time to actually implement a fix, and that resulted in the network slowing down to almost a halt, which resulted in, of course, blocks coming very slowly and it not being profitable. Running up to that, if you guys recall, I had decided that instead of mining Ergo, I would mine a new project called kaspa. Now, kaspa at the time had not been listed anywhere yet, and shortly after had been listed on TradeOgre. So the reason behind mining this, of course, was because, well, I was looking for a new project that was ground up that did something innovative. And in this particular case, what it did that was innovative were things like block DAG and increased blocks per second and so on and so forth. The entire goal behind kaspa was just to mine it specifically for the duration of period that it was able to be mined with GPUs, and shortly after it moved to ASICs. And as you guys know, I'm not an ASICs guy. So at that time, I pretty much quit mining it and moved on to other projects. What I decided to do at the time was sell off a bunch of kaspa and purchase some Bitcoin ASICs. And so when the market got tough, the Bitcoin ASICs were still profitable at my power. So I turned on some Bitcoin ASICs and turned off all of my GPUs. And this is pretty much how I survived the initial bear market going into 2023. And I utilized kaspa to help cover some of the costs as well for operating. That includes things like rent, insurance, power, and so on. And as well as because the YouTube channel had gone down in views, the ad revenue from Google had also resulted in a loss or going down significantly. So I also moved over on that side of things to something called locals, where we could begin talking about projects early on and helping, individuals out that were interested in keeping up and running during the bear market. So kaspa was really the big play. Now, typically with these types of things like kaspa, you sell on day of release. And I'll show you why here, because there's two other projects that have helped me survive this particular bear market. So that means, of course, that I did sell quite early compared to what many people would expect. I sold around the 2 to 5 cents mark, and I do still have some kaspa. It's not like I've gotten rid of all of it. You kind of DCA sell, and I sell what I need to cover power and costs and basically be able to continue mining, because at this time, there's nothing you can really put your GPUs on that continue to be or remain profitable. So the next project that I ended up finding that was extremely helpful was Abelian. And Abelian came out around Thanksgiving of 2023. And it initially was listed on a few different exchanges. I believe MEXC was the major one, and XT before that. And the reason why Abelian ended up working out or paying off was actually not because it was ground up and built from scratch, etc. The reason why Abelian ended up being successful was barrier to entry. And you'll start to notice a trend here as well too, because kaspa had that same barrier to entry. Kaspa's barrier to entry is gone now because you can just simply buy an ASICs, type in the pool, type in your wallet address, and get going. But initially with kaspa, what you had to do to remain or to get into mining kaspa was build your own node, build your own stratum, and continue to mine. And that was something that a lot of people didn't know how to do at the time, which is why I ended up, of course, going out ahead and creating the locals channel to start teaching people how to operate Linux, build nodes, and so on. And that is kind of the thought behind it, because that is what worked. But with Abelian, what ended up happening is this is where I really got into hash rate arbitrage. Because there was no calculator or profit calculator out at the time for this particular coin, it ran under a lot of people's radar, which meant thanks to services like Clore AI and Vast AI, I was able to rent hash rate a lot cheaper than I was able to actually profit off of Abelian. And that meant that I was able to basically stack up a good amount of Abelian and sell a lot of it off to essentially put myself in a position to continue running the farm. And this is kind of the hops and jumps that you end up making, and you have to stay up to date with the projects. But as you can see here, Abelian has been on a downward trend since its release. Actually on MEXC, before it was listed on CoinMarketCap, it was as high as $2 a coin, which is when the hash rate arbitrage was extremely high. I made a very good play here and sold off 75% of my Abelian around that time so that I would have enough to cover my power until the next project hit. The thing is I spec mine a lot of coins that end up going nowhere. There are examples here more recently, like Consensus, for example, where the dev fund pretty much screwed up the entire profitability of that coin, and all of my pre-mine totaled to maybe like a couple $100. I say pre-mine, mining before hitting an exchange, my speculative mine, because I don't pre-mine, but you guys get the point. At that point, you know, that project is dead. It didn't pay for itself, and I have to have made enough on some of these other coins to move on. And really the moral of the story here is, yes, you will have a 1 in a million like kaspa, right? Where the price is going to continue to go up. It's very innovative, and if you hold on to it, you'll be successful. But this project is a lot less common than something like Abelian, or even more lately or recently, one that I spec mined was Warthog. Now, Warthog's still profitable right now to mine. It's just the barrier to entry is a little frustrating for some. The play behind Warthog, of course, ended up being more of a hardware play than a software and speculative mine play, as I had gotten into purchasing the AMD BC250s. The reason why this ended up playing out into my favor is that the BC250s have both a CPU and a GPU on each card. This meant that you were able to kind of bypass the 1 GPU to CPU ratio that is required by the mining algorithm of Warthog and remain extremely efficient. And this meant that essentially I had an advantage on this particular network. The big thing to note here, though, is that you really want to sell around launch. Sure, launch is 80 cents, and it did go up above $1 for some time. But if you were to continue to hold, the price decided to keep going down and down, similar to Abelian. So when we talk about staying alive with these speculative mines, it's really important to realize that your job as a miner is not to mine and hold in all situations, but to remain a business and stay profitable and continue to generate revenue that allows you to continue operating. And thankfully, I've hit 3 different projects across the past 2 years that have enabled me to keep my mining farm up and running without having to completely shut down. And to give you a better idea of how successful and rare that is in this current market, I had 2 other cryptocurrency miners in my current location where I run my farm out of that have now since gone bankrupt and are actually facing legal issues with the landlord that I have because they did not pay their rent. So when we're talking about being successful in this industry, it is a 1 out of 3. And if you look at the types of cryptocurrencies you need to participate in to do this, it can be very confusing. Here's a few things that I have learned, of course, from this overall. One is that the higher the barrier to entry for any given project, the larger the likelihood that you will be successful at being profitable with that project. Abelian was difficult to mine, and that meant that a lot of people weren't mining it, which meant if you figured out how to mine it, you could spin up any Ubuntu machine on any of the rental services and basically have massive arbitrage on that particular project. Early on, nobody thought kaspa was going to go anywhere. They had a very basic website. Nobody really paid attention to it. There were no stratums, and a lot of work had to be done to get up and mining kaspa on the CPU and GPU phases of that cryptocurrency. So the barrier to entry prevented a lot of people from mining it very easily, and everybody was scrambling to find the next Ethereum, which is just not going to be in existence. Warthog is similar in the fact that essentially, because it requires a CPU to a GPU ratio, it was a lot more difficult to learn how to mine it and get to mining it. And this meant that you had an advantage if you figured out how to mine it early on. And the other thing that all of these have in common is I began mining them before they were listed on exchanges. Kaspa that I mined was a majority of it mined before it was listed on an exchange with no price and no profitability calculators in sight. Abelian was the same. And that one even lasted a little bit longer because we did have that barrier to entry that was significantly higher. Warthog was exactly the same as well, where it was mined before listed onto an exchange and then sold once it hit the exchange. The goal here as the miner is to provide liquidity to these markets. The goal is not to mine it and hold it and make a bunch of profit off of it. Your job as a miner, or at least my job as a miner and as I see it, is to provide liquidity to the markets for investors. There's a step between the developers and the investors, and that is the cryptocurrency miner. Your job is very specific. You are supposed to generate the newly minted cryptocurrency and provide it into the market. To think that your job is anything different will have you misled, and you can end up in a position where you've held your bag way too long and the market isn't friendly to it and you haven't done anything. One, you haven't provided any liquidity to the market, which means that there's nobody that's interested in trading it because the volume on that particular cryptocurrency is low. And then two, if you're the only one that has it and you're the only one that's mining it and newly minting it, then there's no market for it. That's why when people with Kaspa get upset with miners over selling their cryptocurrency and driving the price down, I find it a bit ridiculous because the entire point is to give the investor something to purchase. The market will find itself out and figure it out overall. But especially with these new fast emission coins, the entire purpose of fast emissions like Kaspa, like Consensus here recently, like a lot of these newer cryptocurrencies, is to generate a huge circulation at the very beginning of the project so that people have access to actually being able to purchase it and participate within the network without just purely mining it. And then that means, of course, that will drive the price down typically, right? And if the price is going to be driven down, your job, once again, as the miner is just to provide that liquidity into the market and let the market figure itself out. Now, a lot of people could say, I think in the past what I've heard is that it's toxic mining, that sort of thing. But that seems a little ridiculous to me because if you don't have a market for any particular cryptocurrency and the miner is not able to sell it at a higher price and they're just fake inflating the price by holding back a portion of that cryptocurrency, it's giving a false narrative surrounding that cryptocurrency and a false perception of how much that cryptocurrency is actually worth. You really need to pay attention to this too if you are mining. I saw here recently, for example, on the Consensus Discord that one of the developers was requesting that miners pull some of their liquidity off of the exchange to basically inflate the price. This is actually despicable overall because they also have a developer fund. And then that means that if the miners are pulling their cryptocurrency off and inflating the price further than it should be, of course the developers are going to try to, or could potentially try to rug pull that particular project, dump the rest of their coins at the higher price, and leave the miners with no developers. You see, the problem is not that the miners are selling the cryptocurrency. The problem is that the cryptocurrency itself has no demand. And as a cryptocurrency miner, you need to be very aware of this. If you do find that gold mine, have fun mining it and continue to mine it, but it's not going to stick around for certain, and you need to be aware of that. Out of the 3 projects that were successful for me here recently, only one of them has continued to go up over the past year, while the other 2 have continued to go down. But all 3 have been significant in maintaining my mining operation and allowing me to basically function and not go bankrupt, unlike a couple of my neighbors. So if you're interested in more of what I'm doing and my strategies surrounding this, I go over it in detail, including technical knowledge surrounding building nodes and mining new projects over on sonofatech.locals.com. You can start this at any level, whether you have a large mining farm or even just a single rig at your house. You can start practicing this and then you can make sure that you're able to survive these down markets. In addition, you can check out my cryptocurrency e-course, mining e-course, over at sonofatech.com. And I hope you guys enjoyed this video and kind of understand what I've had to do to basically survive. Be sure to hit that like, comment, subscribe, and all that good stuff. And I will see you next Tuesday.